there's a lot doing here. We put out some blog articles. We go for periods where we do a lot of blog articles, and then we go for some where we don't do as much. And we're coming to a period of now where we're starting to document a lot more things that we do. So over the weekend, I put out that A Tale of Two Assaults on Resistance. We got a really good response. Everybody was like, oh, that was interesting. We had a very good response to that. And a lot of people had said, hey, can you walk me through it? So we put this webinar up to walk you through it because it's really like bread and butter kind of stuff. The title of the email and the blog article is wonderful, A Tale of Two Assaults on Resistance, but it's really bread and butter. These clashes that we see at resistance and support is really a lot of what we focus on, at least. What happens with order flow at the edges of the market. If price comes up to resistance and gosh, they're buying like mad, it's probably going to breach resistance. If as it's breaching resistance, you have as much or more buying, it's going to continue on. Price comes up to resistance and then there's no more buying, it's going to go down. It's a really very simple concept. It's not more complicated than that, and I don't think it'll ever be. That doesn't change much because what about ES? We're going to focus on ES today. If we have time to go through crude, this looks really cool on crude oil also, and I know we have a lot of customers who are crude oil traders. We'll get through that. So we're going to get into some charts. So if we get time for crude, we'll get into crude, but right now we'll stick with ES. As prep to this call, I just opened up a chart, my standard chart, and I pushed back like 50 days, and I'm like, let me just grab some screenshots, some good screenshots, so people can see this setup over and over again. And it was like boom, 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 boom. I was shocked at how consistent it was as I put it in this deck. So I'm going to quickly punch you through a couple of screenshots just to get your eyes acclimated. And this is what we're going to look at. Everybody knows I trade with like the world's busiest charts, but I also have some charts staged that are not nearly as busy. I don't think you need as busy for this concept. But what we are going to be looking at today is the forward E-mini S&P 500. And I trade off of a 4-tick range bar chart. That's what we'll be looking at. I think if anybody knows Billy, who I trade with the most, what we're officially calling like tag team trading now, he trades on a 5-tick. And there is tremendous nuance between a 4-tick chart and a 5-tick on the ES. And I think I've talked to enough traders that I understand like who's using the 4 and who's using the 5 and why. And if you don't mind, maybe we'll just talk about that for a moment because I find it fascinating. I find that some of the guys who have gone from the floor, be it the New York Stock Exchange or the Chicago Board of Trade or the Chicago Merc, to screen trading, people who have done that transition, so the more mature traders and those who are now trading ES, they all, by and large, seem to do the 5-tick. Some of the other guys who have always been like more electronic traders are 4-tick. That's one apples to apples. Another apples to apples is by and large, and I think this is a fairly good statistic just from off the top of my head from people I speak to, and I try to speak to a lot of traders, is that a lot more of the 4-tick traders are entering on market orders and the 5-tick traders are entering on limit orders. And to me, that is incredibly interesting because let's talk about the difference between a 4-tick range bar and a 5-tick range bar is 25%. It's a full tick, it's 25%. That's a big jump. So in that 5-tick bar, you're getting a confirmation that your move may be a little bit longer, let's say off the bottom here. And if it goes up 5 ticks, you may have wiggle room to pull back a tick or two, which is where the 5-tick guys are trying to nest it in. And the 4-tick guys are like, I'm done with my 4-tick, I'm on to my 5-tick, I'm at market. And those are the nuances that I've seen over and over again. And if anybody has some insights or experience or like has thought about that, if you ever want to throw us a note about what your thinking is, I'd find that fascinating. We don't do much work with 3-ticks. I talk with some traders who do 3-ticks. We're going to be doing more and more with 3-ticks because I think they're very, very interesting also. But, you know, it's like the Ginsu knife. You better know what you're doing. Slice little fingers off. This is going to be more of an informal session. So we try to stage the questions towards the end because we generally cram in a ton of stuff. But feel free to throw your questions out at any time. Let's go over here and talk about some background or what we're going on about. So if anybody doesn't know, Sceeto, which is where I work, and I'm like, you can consider the chief algorithmic architect. I'm the one who designs all the algorithms, and 70% or 80% of the algorithms were built for my own trading and my own insights. And I'd say 20 or 30% of the algorithms that we have were written because of people I either trade with or actually trade with. That's really it. Who said, oh, I'm looking at this. Can you write something like that so I can look at the data better? And that's how we get all of our trade ideas, just from actual looking at the tape. So I think everybody knows we have like the new website, and we're trying to do a better job of telling our story. We're adding more blog posts. This was a great trade that we took this morning, at least internally. If you get a chance to look at it, it's very discreet, it's very obvious, and this is kind of what we call our pitch and putt or in-house chip trade that we do quite a lot, like a chip shot, very, very easy, no big deal. Everything's under the blog. And let me just find out what we're going to talk about today. Who's that guy? That's me, by the way, if anybody's curious. Here's a good, very good video on how we get our inside information. If you do get a chance to watch it, I would recommend. It's short. I think it's less than 2 minutes, maybe less than a minute. It's very short, but if you want to know how we get our inside information, because we feel we deal in advanced information. So if you're going to be in this market, you should have like a better handle on information. If you think that a moving average is going to do it in this day and age, it's going to be very tricky to trade this market. But if you have some sort of like advanced information where you're looking at discrete order flow components and you really got a handle on what's happening on the Globex servers in Chicago, which are the Globex servers, if you're not familiar, are the actual physical transaction matching engines that our trades match up with other traders on. If you don't have a handle on that, it's going to be tricky. But let me just find the one setup we were talking about. Here we go. All right. So let's walk through this. So here is basically a pretty simple chart. And this is a much bigger chart. I put it in a 14-tick range bar chart. A lot of people asked about this. Why a 14? So I trade off of 4. Billy trades off of 5. I guess a lot of people on this call are 4 or 5. But in terms of the market map, in terms of like the higher time frame, internally here we use a 14-tick range bar chart. And we find that that gives a very clear picture of support and resistance. You can put a couple of days on a chart without getting it too busy. It's not too granular, and it's not too big that you don't get enough information. And down here is MACDaddy. So MACDaddy, if you don't know, is the rate of change of order flow on the Globex servers in Chicago. We're going to be spending a lot of time on the referencing between how MACDaddy is behaving as it relates to a known high, a known high, a known high. That's really what we're going to focus on today, because if we have a known high, that's where resistance is. That's the clash of the border. The resistance is the skirmish point where buyers and sellers had a standoff, and for the interim, the sellers won. The buyers lost. The market's going to go down. So what's interesting to me and to a lot of order flow guys that I know is that, well, what happens to the rate of change of order flow on the Globex servers in Chicago when price visits known resistance? And why is that important? That's important because if the rate of change to the buy side is increasing at known resistance, that means the Globex servers where your buy order or your sell order is going from your home office or your prop firm or your quant fund out through your router over the internet to Chicago to the Globex servers. And if the rate of change of order flow is changing at known resistance up to the buy side, resistance is going to get pierced. If it comes up to resistance and the rate of change decelerates or goes to the negative and accelerates to the negative side, it's going to turn around. That's really all we care. So I think we've distilled that down to its essence. So let's drill down and look at let's look at a bunch of order flow components and say, this is what happened in order flow at this price point. And then we'll go through just a bunch of examples and see if that behavior is consistent. So here we have the number, 210350. That was the known high. It was the prior day's trading high in this example. Market went up. This is the 22nd coming into the 23rd. Market went down. Market went back up. Turned around right at the known high. Why did it do that? Just to cheat kind of quickly here, you'll see the deceleration. You're at the known high, the deceleration in the rate of change of order flow. Now, generally, we look at the rate of change of order flow on a 4 or 5 tick chart, but if you're a longer term swing trader, it's unbelievable what you'll see on a 14 tick range bar chart. So I would recommend anybody, I see we have a ton of Sceeto traders on the call today, keep a 14 tick range bar chart up with Wind and MacDaddy, and you'll see stuff if you're a longer term swing trader that'll give you evidence that you should be shiny happy. One other thing to look for on a 4-5, and particularly when you see it happen on a 14 tick range bar chart, is this puppy here, where you see an engulfing bar. I think anybody who's traded with me knows I put a lot of credence in engulfing bars, and that's something that's quite important. Let me know, because we're going to go into micro detail. Today's conversation is so much about the nuance and the micro detail, so we definitely want to you to be able to see what's going on at these exact points. Michael's asking a good question, if time is in Chicago or Eastern. Everything on my chart is Eastern. I'm in Eastern, so we're 1 hour ahead of those puppies in Chicago. You'll see as price moves up here, Wind is decrementing, MacDaddy is decrementing, and then price turns around, which is what you expect. Price may march up, but you're going to get a divergence, and that's so much of classic technical analysis. You know, if you go back to the 80s and the 90s, you know, people looked for, they had RSI, you had momentum, and you had moving averages. You didn't have a lot of stuff back then. And people looked for divergences between price and relative strength, right? That was the game back then. Now, what we look for is divergences between price and order flow. The logic is exactly the same, except order flow is much faster than price-based momentum bars. All right, so can we define Wind? Let's talk about Wind for a little bit, because Wind is one of the strongest tools in, at least in my trading arsenal, but it's very different than MacDaddy. So there's 2 or 3 nuances that you'd want to get your head around. So Wind, just to get you, because we're going to spend time on Wind. Wind is the greatest thing since sliced bread. Anybody see Wind at the sell down today? This was unbelievable. I was getting ready for the webinar, and I was like, you don't see this much. Not right there. Like that tell? This was unbelievable. They pressed it right there, the way that was pressed. But we'll get to that. So Wind, this is a great question. I think Eric asked what Wind is. If you know what Wind is, I recommend let's stick with it. Don't drift on this part for Wind, because the nuances are fantastic. So Wind is different than MacDaddy. MacDaddy, we discussed, is the rate of change of order flow on the Globex servers in Chicago. Since we trade the S&P so much, we built this Wind. What Wind does is it doesn't look at futures data. It looks at equity data. And it's a very big indicator. It's a super cruncher. And what it does is it goes to each component of the S&P 500. So that's like Altria, Ford, Apple, General Motors. I think Amgen is one of them. I don't know them all, but I'm not really a stocks trader. I'm a futures trader. But, you know, the S&P 500. And we consider each stock a market. So Ford is, I consider Ford a market. It trades on an exchange, but Ford in and of itself is a market. So we built these algorithms. It looks at Ford. And it says, what is the rhythm of the buy and sell orders for Ford? Is it, you know, and it was really looking for congruency and like a rhythm, like a pattern. Whatever it is, it's looking in there. And it assigns that rhythm a number. And it can only assign a value between a positive 100 and negative 100. So it's just trying to say, hey, are they all buying? Are they all selling? All the bots that are hitting this tape? Or is there a mishmash? And we just want to know that. And then what Wind does, it does this for each component of the S&P 500. And then it aggregates that information into one indicator. So Wind is taking a massive amount of information and then collecting it down into this cute little thing that goes from positive 100 to negative 100 to give you an idea what is the synchronicity amongst all the different trading bots, amongst all the different markets, the 500 markets in the S&P 500. And if they're all aligned to one side, that's a tell. You know, we're using that word quite a bit a lot. Like if you're a poker player, there's a tell. The guy has a tick on his face or he rattles his keys every time it's a good hand. This is a tell in the market. And what we look for in wind is when wind is pressed in one color, like boom, 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 it is here all of a sudden. Or if there is a decrement in wind, like wind goes up and it decrements, that's really what we're looking for. Now, wind, since it's aggregating so much information on such a massive amount of markets, 500 different markets, it's a little slow. It's not a fast leading indicator like MacDaddy is going to be. MacDaddy is very fast because it's only looking at the rate of change of order flow on the Globex servers in Chicago. So MacDaddy is going to be fast. Wind is going to be a little slower, but wind as a confluence is going to tell you a lot of things about your intra-day like swing positions and or whether you hit the low or not, because often you're going to see the buying come in late or the selling come in late, which is the last of the flush. Here's the macro view, and this is where we're going to look at right now. The run up, the tick, and the pullback. Let's spend some time there and see what happens. Kamal's asking a great question. Do Wind and MacDaddy have to agree before you make a trade? I wouldn't say that they're binary, like you get a yes on Wind and a yes on MacDaddy. There's some confluences, and I think we'll do enough patterns that you can kind of see what's going on. So here's the 2103 high right here. What's the time? Right about 10 a.m. Eastern. And again, that's boom, right here, this up and down. The market marches up, and you see buying in MacDaddy, buying in MacDaddy, buying MacDaddy. MacDaddy, I don't know if you can see it here, negative red. OR up here, the super busy chart, means the offers were replenished. So that's an algorithm that looks in the order book and says, oh, the offers are coming in this like freaky pattern where somebody's filling the book. And when this guy gets that, when he gets a read on that, he plots it. Comes back down. MacDaddy goes up. Price responds. MacDaddy pretty much the same. Price goes up, closes down here. MacDaddy goes up. Price goes up. We have a tick ratio here down here. This is a proprietary up-tick ratio. That's saying that like orders are coming through the order book to the upside on the tick very, very fast. And then again, here, very, very fast. These are back-to-back up-tick ratios. If you saw these here, like at this breakout pattern, it might have meant they're pushing up. But if you see here coming into the end at known resistance, this is a huge tell that it could have conclusionary selling. That's a big tell. So down here you have accelerating MacDaddy. That means it might push up. We have the known high, and now we've got this uptick ratio. So this is really where we're starting to read the tape. What's going on here? Is this a new leg up, or is this the end? Here, kind of looks like a new leg up, except this is kind of ellipsy. When you see the rate of change kind of consistently up, that actually tends to mean more exhaustion. When you see more like steady, 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 steady stuff, it tends to move up. And that's something we're going to spend some time on today. So now we have this one piece of evidence. Obviously, the rate of change is accelerating. Now we've got these magnificent uptick ratios. If you are a support and resistance trader, the 21035 number would have been in your head from the prior day. That would have been burned in. Oh, that was yet the prior day's high. Price ticks up. We have a down bar. We have a decrement in MacDaddy. Okay? No orders above 2103.5. Super important. I know everybody who's trading this was paying attention here. What's going to happen? Are we going to trade at 75 or not? Because there's power coming in here. The next bar is a down bar. MacDaddy decrements. Next bar is an up bar. What do we have? We have EQ, HFT, REV. That's EQ is equities, high frequency trading. REV means reversal, which means that on the equity side, this algorithm isn't looking at any futures tape. It's looking like on equity tape. It saw a bunch of high frequency trading sell orders, then immediately. So it's got to be back to back for this to surface. a bunch of high-frequency trading buy orders came in. Now we've got a tick ratio above the bar. We haven't pierced yet. McDaddy decremented back down to the zone, right? Not a tell yet, not a tell. Is that buying or is that just a pause in the action? Don't know yet, but everybody's paying attention. So if you're looking for a breakout, may or may not happen. If you're looking for a fade, may or may not happen. But when you're here, if you're looking to go long, you're really going to need some corroborating evidence to really say, yeah, I want to buy here or buy here. Like it hasn't happened yet. This is a huge tell. Everybody's paying attention here. We should have seen more buying. If it's going to come up and breach, this is when the buying should come in. It doesn't. Now we're starting to say this is kind of like the conclusion in the book. We talk about conclusionary selling. Let's go to wind. Wind was decrementing here. Decent tell. I wouldn't put my house and my kids' college education, everything on this decrement in wind, but I'm certainly paying attention to it. It should have been steady or up, but not decrementing and not up down. Remember we talked about wind coming in late, Eric? This is a wind came in strong at the breakout, then moved up. A little late to say, but it's already decrementing. So the jury is definitely out. If you were to buy here and say, I'm going to get ahead of this and buy, now you know that that was a bad decision. By this bar, you know, I shouldn't be buying here. It's absolutely. And that's one of the great things about order flow. It's going to tell you in real time, I'm in good shape, or I may not be in good shape, and I better be smart. Because I talk to a lot of traders, and they're going to get ahead of it. Oh, I bought here. I want to get ahead of it. I want to get in before the breakout, before the push. So, hey, you're welcome to do it. Look, there's this stuff coming in. Maybe it's going to go up. Maybe it's not. Tick up here. Perfectly reasonable. The price should tick to 35.50 and get a little pause and get some juice before it goes up again. It doesn't have to drive straight through. Perfectly reasonable what's happening here. Here, great. But the jury's out by the time you get here. So if you said, I'm going to get ahead of it, I'm going to buy, this is where order flow is going to tell you in real time that's not a good call. That's exactly it. So let's do something here. Has anybody bought early on a perceived breakout? They're going to save a couple of ticks and get in. I've done it a zillion times. And now I know in real time whether I'm being a schmuck or not, and it keeps me out of trouble. That's why I've become a late trader. Anybody who trades with me know I tend to trade late. I wait, and then I get in the market. I'm like, I'll wait for the bus to pull out of the station. This bar here, this is a super important bar. If by the conclusion of this bar, you're buying long to get in anticipation of the breakout, that's a fool's errand. Right there is the fool's errand. Right there you should know in real time. I think we have a ton of Sceeto users. So if you're using Sceeto, buy here, you don't want to be buying early. Here, you're going to, whatever, maybe with your judgment call and all that, but by here, you've got a hard tell. It may or may not go up, but it's definitely not gunning it anymore. Let's look at the next bar. Let me tighten this up so you can see that. We have a high-frequency trading sell surge that came in here. So the background is now peeling from green to red, may or may not meet anything. By here's red, and price is decelerating, right? Price taps 50, the down-tick ratio comes in. So now as the order book spun up hot, and we're looking at, a lot of people look at volume. But really, what's also, I think, as important or more important as we do more and more research on this is not just volume or bid-ask, but what is the behavior, the pattern, the tick behavior of how trades are executing in the order book, and then that change in the order book. And that is huge. The market goes red. What happens in the order book? This is very, very important, at least to me, is that it's not just volume, it's not just bid-ask, it's, the rate of change of orders, and then what is that uptick, downtick? What's happening in the order book? Which you can see pretty much. Like I know people are dome traders. You'll see stuff in the dome. And we've written a lot of code around that to say, well, how are things changing in the book? How are orders being replaced in the book? And that's a very important tell in terms of, particularly at these known resistance. So I'm going to ask a couple of different questions came in. One question from Raj, what are the colors of the ticks ratio? So the tick ratio comes off of an algorithm or an indicator that we have called tape meter. Everything that's yellow is tick ratio. And what's important in tick ratio is whether it's below the bar or above the bar and how price responds. If you have an uptick ratio and price responds to the upside, you'll expect to see continuation. If you see like a downtick ratio like this and then price immediately turns and there's another uptick ratio, that means it's going to go the other way. So it's the up and the downtick ratio are not in and of themselves going to tell you as much as if you compare them to price. And that's what we're always doing. We're comparing order flow to price, order flow to price. How does price respond to order flow? And once you get a handle on these kind of like basics, the patterns repeat themselves over and over again. So let's zoom out a little bit. What happens? I don't know if you can see that here, but the selling comes in MACD, dunk, lower low, right? Here's a low, a pivot low, because I know that this bar's low is higher than this one, lower. The rate of change on the Globex servers in Chicago is accelerating to the downside. The rate of change is accelerating. I know I have a lower low. Super duper important. And it came in right at the known high. So that infers to me that they, put quotes, if you were here, you'd see me do the quote marks. They are selling. No messing around. Like, they are selling. They gunned it up, and they are selling. And we know that for a fact because we have it here on the tape. So I think that a lot of these shops that are out there, the Goldmans, the Citadels, the Renaissance, they're very smart. They know what they're doing, and they've got it figured out. So what happens? Blum, 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 blum. Price goes down, lower low in MACD, price goes down, right? Price goes up. We're going to talk about we can go through every bar, but I don't think we have the time. Let's go back. What happens at resistance? Comes back up, right? Same old story. Fairly steady buying. The pullback in MACD here. Nice little pullback. If anybody trades spikes in MACD, by the way, next we're going to commit for a while to every Thursday doing a webinar. Next week we're going to do just MACD, and this will be part of it, like what we call a spike in MACD. If you trade spikes in MACD, that's about as pristine as you're going to get. Dunk, dunk, dunk. It's going to go up. We have the buying is coming in, the equity high frequency trading, the reversal green, a buy surge, dunk, 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 higher high, and now we're coming into 3150. This is the second assault on 3150. Let me pivot over here. You see it? That's this puppy here. Here's the second assault. And we'll look, is there a difference between this assault and now this assault? So ticks to 75. Right here is our first tick to 0375. The order book, there's a print in the order book at 375. Now, some people are like, do I buy the breakout on the first print or not, right? Who knows? But by the close of this bar, which is the open of this bar, and we've got MACD still coming in. So they're buying it like they mean it this time. They're not decelerating. If MACD was here or here or here, I'd say if you bought the 3750 on the breakout, it's not the 37, the 03775. If you bought 3.75 on the breakout on a market order, and let's say you got filled at 4, you're fine as long as MACD continues to buy. As long as the rate of change is up there, they're buying, you're safe. If they're no longer buying and they're decrementing, you may no longer be safe. It's as simple as that. So, does everybody see that here, the difference, and why we're looking at the rate of change on the breakout? Boom, it ticked to 75 the first time it's traded there. Yesterday it turned around there. Early in the day it turned around at 350. Now they went to 75, and yet the rate of change is increasing. That's your money shot tell in a nutshell. David is asking a question that we probably should have hit earlier. He's asking the dotted white line is predetermined resistance. How do you decide the price of that? So I wrote this down. I meant to show it. There's a bunch of different ways to trade or define resistance, and we're going to get into some discrete ways right now. You can do a handful of things that I do. I'll tell you what I do, and I'll tell you what some other people do. One is a 14-tick range bar chart. It's going to tell you pretty good. If you have a turn on a 14-tick range bar chart, that's a pretty good support and resistance. And you could cheat like I do sometimes and just, it's not that complicated, put a horizontal line in Ninja We can leave it on stay in draw mode and go like this and just go boink, boink, boink. You can do that, David, or you could cheat a little way either. Ninja has an indicator in here called, and this is so easy, so everybody should do it, prior day open, high, low, close. If you'll look here, you'll notice that I have the prior close transparent and the open transparent, so I'm plotting the high and the low. You click that, that'll automatically draw your prior day high, low. Very easy then to see on the chart and trade. And we have the S&P 500 price magnets. These are freebies. I don't know if everybody knows where they are. And you could see these. S&P 500 price magnets, you can use those. They're pretty good. If people don't know these, they look great on a 5-tick chart. 14 is a little big for them. On a 5-tick chart, you can use the S&P 500 price magnets. What they do is they look at the overnight high and low, and then they extrapolate from there. The reason that we trade so much the overnight high and low and the prior day high and low is that all these trading algorithms, these bots, are actually monitoring the market, and they know where the high and low is. They're programmed to trade around there, and that's a good place where they're going to get busy over and over again. So we use that. So Greg, I'm going to hold off. Greg's asking a question about the delta distinction between the polynomial regression, which Bill uses, and the Bollinger I do, and I'll hit that in about 5 minutes because there's a couple things I want to get through, but there's some obvious reasons why and what the delta is and where you could use either. But let's now finish this example up and then attenuate your eye or attune your eye to what's going on. Buying comes in, wind stays steady, and the market's going to go up. Has anybody seen Groundhog Day? There's a scene in Groundhog Day where Bill Murray is robbing the armored truck, and you can see he's like, oh, there goes the driver. He drops his keys. He turns his back, picks up, and so Bill Murray picks up the bag of loot and walks away. This, what you're going to see, is the same thing over and over again. It's always the same. So let's just look at a bunch of examples. I grabbed these here starting March 12th. I'm like, let me put 50 days on the chart and move forward. And we won't have time to get through them all. So just do this as a homework assignment for yourself, right? We got price. We've got all these red lines going up here. We've got a bunch of lines, right? It's not much more interesting than that. Price came up, pierced through, decremented. It died. It doesn't have strength to break, right? Not that complicated. Price moves up, comes down, doesn't have the strength. Price moves up, steady green, and it's going to go up. And you're going to see a real correlation between how strong McDaddy is and how strong the breakout and follow through is. That's pretty much it. Here's some known resistance. I see one line and two lines. So it went from dash to solid. It looks pretty good. Sideways market, tick, 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 up, down. McDaddy came in, they're buying. It's been going sideways for 3 hours, right? 11:30 to 14:40, over 3 hours. What's going on? They decide to buy right here. Where do they decide to buy? It's evident. They left their footprint on the tape. Institutional is coming up. Wind is coming up. They finally pierced this bar. And he pierced it like they meant it. So price is going to go up. Boom. What happened? Price went up through here, got strong McDaddy, should pierce, right? Not that complicated. New highs are made. McDaddy decrements, so it goes sideways. They bring it up. Where's our money shot up here? They're bringing it up. McDaddy's getting bigger into the high. If you bought early, like we saw earlier, the tick ratio, boom to up, and then boom to the top side, just like we saw. We saw the reversal in the tick ratio. OR offers replenished. It ticks here, doesn't pierce it. They're selling due to the lower lows, and you're not going to have the follow through. Okay? Here's another one. Hopefully, after a moment, these are all going to look incredibly the same. I think that one is the same, right? So you could just, went the wrong direction. So you say, oh, it's the same stuff over and over again. Oh, Greg, that's a good question. Greg's also asking about the distinction between McDaddy, like the standard flavor, the McDaddy institutional, and the McDaddy retail. So here we've got some known resistance, right? There's a lot of lines that came up here. It's trading in this way. It went down. moves up, and what happens? It pierces through, right? McDaddy, it's got oomph to pierce through. Comes up to the next levels. Doesn't teach this level. Decrements. Now we have a lower high put in on the lower high and then down, right? Next slide. I'll go through. This is great. I wrote, huh? What happened here, right? We have the known high, comes back, moves up, higher high, so it pushes through this level right there. Here is this bar. It's good. The top bar, it did push through, but McDaddy decremented. So yay, it broke out. It looks like it's going to break out, but by the close of this bar, it's already decremented. Next bar goes sideways, and it's down, down. So price and McDaddy are going to trade. If it went up and you bought here and you say, oh, maybe it's going to hold, probably not. They're not buying anymore. Let's go again. Here's some known levels. It's coming through. You see the buying. It should push through. It comes up to here, right? This is the known level. Pushes through this horizontal line here. Comes up to the next horizontal line. Decrements. Not going to have the strength to push through. Comes back. And you can see the date stamps. These are pretty much one a day, like 312. The market's littered with this. The market is absolutely littered with this behavior. It's all over the place. I'm not really cherry picking. It's everywhere. Market comes up, the buying, and it's going to push through. Push through again, and then pulls down, and then up. But it pushed through, it made it. You're here, you're safe. Comes down and up. Next. Here's some known resistance. Buying, pushes through. McDaddy decrements, price is going to decrement. Here's the next zone that got pushed up. As it pushes up, buying to push through, and you're off. Steady, nothing crazy, so price is going to respond steady, nothing crazy. There we go. Known, here's a horizontal line, here's a horizontal line, all drawn by my little horizontal line widget. Right, green, coming up stronger. As it pierces through, let me move this so you can see better. Pulls down, but still strong McDaddy, steady McDaddy, price is going to respond. So what happens here? Highs put in, travels back, moves up, pierces. Yay, the breakout. Oh no, the high bar here, it's already decrementing. Going sideways, McDaddy is still decrementing. I don't think that this thing is going to hold. So if you're long here, you really want to cash out or tighten your stops. And sure enough, as McDaddy comes in, price is going to fade. What is it, the 16th? Let's look at the next one. The 17th, right? This is a great example. Sideways, we have our known high. Price comes up. Yay, McDaddy's coming in. I buy the breakout. Oh, no, McDaddy decremented. Maybe it's not going to follow through. Let me tighten my stop. What's happening down here in wind? They're selling, right? They're selling. It's obvious. On the equity side of the house, they're selling. Now here, look at this. Market comes down. If we're looking going forward in time, my only horizontal line is here. Here's my next red horizontal line. Yay, it pierces up. But look, it pierces up on negative McDaddy. That's not going to hold. That's the fake out that takes people. And we know that in real time. This is all happening in real time. Very quickly, because I want to get through some stuff. Here, they milked it up. They're telling me I only have 10 minutes. Clunk, it goes through. Clunk, it goes through. Here's an example of them milking it up. Once McDaddy degrades and decrements, price is going to decrement. It's not that complicated because we're looking at the rate of change of supply and demand, right? Here's your highs, your resistance. McDaddy pisses through and falls back because McDaddy doesn't follow through. This time when it comes for it stays steady. So that's it in a nutshell. Oh, by the way, if you don't have Sceeto, we have a promo code. So if you don't have Sceeto, we have a discounted quarterly, I think for $5.97. You're welcome to use it. If you don't have Sceeto and you want to punch through this data, just this one setup of trading resistance, hey, it's going to break out, I want to go long, or it's not going to break out, I want to be flat or short. This is real bread and butter stuff we do all day long. So please pick up a free trial of Sceeto. There's a promo code is HFT tape, and then use the registration. If you need help getting set up with that, please open up a help desk ticket. We'll do the install for you. If you have questions and you want a consultation, a little walkthrough, there's a thing on the site. There's generally somebody around to help you out. So we're happy to help you. Okay, let me jump into some of the questions. Stan's asking, are there any YouTube videos of your system working in real time? Kind of. We put out a ton of videos. We had a trading room, Stan, open for a year where we showed our screens for real time. And it was such a money loser. It was so much time and effort. We're like, we couldn't afford to do it anymore. So we have shown our stuff for a full year to people who are on this call. And now we're just going to trade it. And then with trade ops, Stan, we're going to be pushing our trades in real time to your machine, and you could monitor them in real time. So you don't need a video. You could just watch it in real time. That's what TradeOps does. TradeOps takes our trades that we're trading and pushes them to your machine in real time, and you can see them on your machine. So better than a video. Perfect, right, Stan? Ruminguru is asking a great question. Why look at all 500 stocks? Great question. The reason we do that is because we trade ES, which is the forward E-mini S&P 500 contract. And the Globex server, that order flow, offers a very rich tape in terms of information. But this whole ES is predicated on the basket of stocks that are in the S&P 500. So since we have all this magnificent computing power, it's 2015, we have unbelievable machines and unbelievable information. Why don't we take all this computing power and point it simultaneously at the 500 stocks and see what we see? Because we know that the arbitrage bots are going to keep the basket of the S&P 500 and the futures market aligned. So if we get some tells, some important tells from the stocks tape, we want to add that to our analysis. There's great, we want to have better information than the next guy, and that's magnificent information. If we can get it, we might as well do it. So there's a couple of wrap-up points I want to let. If you don't have a free, a copy of Sceeto, I highly recommend you get one because it's awesome. And you can see it's like, buy support. If the price comes down to support and the bots are buying, you want to be with it. If price goes up to resistance and the bots are buying, you want to be with them. If price comes up to resistance and the bots are selling, you want to be with them too. We're not in a position to shift the market like Goldman can or the Fed or Citadel or Renaissance, but we are certainly in a position to piggyback on all their hard work and all this wonderful information that they're disseminating. I started putting together a slide that's very important. How many people have been, we call it day trading since, let's say, 95 or 98, 1995 or 1998? Anybody? Okay. And if you were in 1998, you said, oh, I'm a day trader, you're a cool guy at the cocktail party. If you live in Vermont like I do, and you tell people you're a day trader at the cocktail party, they will literally throw you out of the house and put you in the barn with the pigs and the cows. Day trading has become such a dirty word. And I'm in this industry. I love day trading. I think it's wonderful. We don't start wars. We don't manufacture guns. We don't pollute except for the cost of the electricity and running the data centers and computers. People say we don't manufacture anything. We manufacture wonderful software. We're at the cutting edge of intellectual property and using our minds in terms of fairness and equities. Day trading, the market doesn't care what color your skin is or whether your parents were rich or poor. It is the most egalitarian industry on the planet. So I take it as a badge of honor to be a day trader. So I don't know when it became a dirty word, but today is 2015. And the CME a couple of weeks ago said the pit's over. We're shutting them down, right? This is the golden age of day trading. We have right here, you can see from your house, wherever you trade, all this magnificent order flow information that we have algorithms and we can pick up, and we can now compete in this market against the biggest guys on the planet, sitting at home in our underwear because of technology. This is the golden age of day trading, and I hope it becomes a respectful profession again, because I think it's amazing. And then if you're going to trade in this industry, let's use the smartest tools out there. Let's use tools that work in the market in 2015 and not, oh, give me the moving average. So I want to thank everybody. We still have like a bunch of people in the room who stuck through this whole presentation. My name is Carl Weiss. I'm with Algo Futures, which is the owner of Sceeto. I'm the chief algorithmic architect. I'm the guy who writes the algos. I appreciate your time. I'm glad that you could, spend some time with us. If you have any questions, we're happy to help. And I just want to say thank you for your time. I hope you learned something. I hope you walk away with something. And please come back again next Thursday. We'll spend time on Mac Daddy, the engulfing bar, and I think institutional versus retail and some of the other things we couldn't get at. So everybody have a wonderful spring day. Get outside, and we'll see you soon.
Sceeto's advanced algorithmic order flow data is now available within TradeStation, NinjaTrader, MultiCharts, and Sierra Chart. For more information, please visit www.sceeto.com. This is Cuerva from Sceeto. Happy trading.